Hello, hello, hello. Hi, this is gonna be the weekly market outlook for July 8th to July 12th, and let's get right into it. So, change up my screen here. Okay. So first off, I do want to take a look at the economic calendar for this week. So this week we do have CPI and PPI, and a bunch of FOMC or members, the Fed chairs. So we have Fed Chair Powell talking on Tuesday at 10. On Tuesday and on Wednesday again at 10 o'clock. So those are two red voter news of when Fed Chair Powell testifies or speaks. I'm not too sure what he talks about. I just know that like whenever he talks, there will be volatility in market, and that is us as traders. We need volatility to make our we actually want the markets to move. If the market's not moving, then we can't benefit from it. So yeah, just watch out for Powell here. And on Thursday and Friday we have CPI and PPI. So CPI releases at 8:30 EST on Thursday, and on Friday we have PPI released at 8:30 EST as well. So those are two major, market movers this week that you want to just pay attention to and just be careful of. And let's dive into. So I actually want to dive into the week, this previous week's trades here. Why is it? All right, so it's gonna be a brief, just weekly recap of the trades that I did take this week. So here, my first trade on Monday this trade was based off of the 15-minute candle. We came into this 8-hour FEG here, and we had a pretty nice reaction to it. So based on this 15-minute candle closure, this candle 15-minute power of 3, I can anticipate for us to take out this 15-minute high. So on the lower time frames, I want to see, do we have any supporting ideas or supporting FEGs that supports the idea of us taking out that 15-minute high. And on the 2-minute, there is a 2-minute FEG. So I go onto the 1-minute time frame, and I take my entry as soon as we dip into this 2-minute FEG. So the thing I do want to know about this trade is that prices dips below towards that 10 o'clock 10 a.m. open 2 times here. So we did it, or actually 3 times. Once, a second time, and a third time. And we show respect to this 2-minute FEG. We never closed below it, which is good. One thing I could have done better this trade, I did know, was that I actually closed my trades here. I closed the trade as soon as this 1-minute candle closed like this, because in my head, just seeing this really big wick candle here on the 1-minute time frame, I felt that we were probably going to run these lows and continue higher. But like I said, I should have built my conviction and be more confident in the trade setup itself, and just allow the trade to run. So this is one thing I could have work on. I can improve coming into this next week. The second trade on Monday again is, I believe, right after this trade. So based on this 15-minute candle here, I marked this 15-minute. It's the wrong 15-minute high. It's this one actually. It's the one prior to it. This 15-minute candle. So based on that 15-minute candle's power of 3, I can anticipate for us to take out that high and rebalance this 30-minute FEG here. So I want to see us, go higher and probably rebalance more of this 30-minute FEG. And on the lower time frames, I look and find to see if there's any supporting, to find if there's any supporting FEGs that supports the idea of us taking out that 15-minute high. So on the 5-minute time frame, we have this 5-minute FEG, and when prices retraces back inside it, I take my entry. One thing I do want to note about this trade that gave me conviction to even hold it is look at how the 5-minute candle closes. Like, we close right above that consequent encroachment. This is an algorithmic pattern. You know, that algorithmic pattern of us closing above that consequent encroachment just gives me more conviction and confidence to hold my trade and allow my trade to move or like play out. So on the 1-minute time frame, you can see here I'm buying below the 11.15 power of 3, and I bought into that 5-minute FEG. I nearly get wicked out here, but the thing I could have done better here was I could have had my stop loss at this 1-minute FEG's low and not this low right here, and not at this candle's high. This stop loss should have been placed under here, which now looking at it is something I could have done better. I could improve on. But yeah, second trade of Monday, and so the very next trade this week was actually on a Wednesday. So this trade is based off of the 30-minute high, the 1-hour high, and the 15-minute high. So all 3 time frames, we all have the same objective on those 3 time frames, which is the second aspect of my time frame alignment concept. I didn't want to, I don't have any targets to aim for after we take out previous week's high, which is essentially the all-time highs. So I'm just trading lower time frame models. And I go onto the lower time frames, like I said, rinse and repeat. I go onto the lower time frames to see if there's any FEGs that can, that supports the idea of us taking out that 15-minute high, that 30-minute high, and hourly high. So there's a 5-minute FEG, and prices dips back inside this 5-minute FEG once, right? But I didn't take my entry on this first retracement because I don't have an objective for prices. There's no objective as of right now for prices to take whenever it retraces back inside this 5-minute FEG. So whenever prices dips back inside this 5-minute FEG once again, there's an objective this time because candles closed. The 15-minute candle closed, the 30-minute candle closed, and the 1-hour closed. So I take my entry on the second retrace, and notice how I'm buying below the 11 o'clock open. I'm targeting that 15-minute high, which is essentially the 30-minute and 1-hour high. So prices dips back inside this FEG once again for the second time and takes out the 15-minute high. And yeah, that was, pretty solid trade. I kept my I kept runners to continue running, and I just set up standard deviations here. But yeah, solid trade. The next trade I do want to talk about is another trade that was on Wednesday, sorry. This trade was based off of the 15-minute candle. So here, whenever we displaced away from the London highs and we just kept displacing higher on Wednesday, we created a 15-minute fair value gap. I don't like trading that first initial retrace into the 15-minute fair value gap because sometimes the 15-minute fair value gaps can be large range. So whenever I enter at the 15-minute fair value gap, the stop loss, my risk is it's pretty large. So if I apply the same concept of retracing into a 15-minute fair value gap, but let's say it's on a 2-minute fair value gap or 3-minute fair value gap, if I can go onto the lower time frames to really pinpoint my entry, it allows me to mitigate my risk, and I don't have to set a really big stop loss. So based on this 15-minute candle's power of 3, I can anticipate for prices to take out that 15-minute high and that 30-minute high right here. So notice how this 30-minute candle closed. we can anticipate for us to take out this candle's high before we take out this candle's low. And on the lower time frames, do we have any ideas of, do we have any, you know, supporting PD arrays that supports the idea? So we have the 2-minute FEG on the lower time frames that supports the idea of us taking out that 15-minute high and 30-minute high. So we dip back inside the 2-minute FEG when we take out the 15-minute high, the 30-minute high, and also previous month's high and the draw of liquidity. This is basically all-time highs here. So, you know, this is a solid A+ trade, just because, you know, I waited until there was a reaction away from the 15-minute FEG, and I based my trade off of a 15-minute power of 3, and I also have targets that align with my existing power of 3 already, which is that 30-minute high and that previous month's high. Yeah. So on Friday, there was another trade that I take, and this one actually was a losing trade, but it's the exact same, basically the exact same trade as the trade that I just went over. So notice how on the 4-hour we have this 4-hour objective, which is this 4-hour high. On the 1-hour time frame as well, we also have this hourly high, which is my objective to take out before, you know, anything. So notice how this hourly candle closed. We came off of a hourly FEG and we had this bullish closure. So I'm anticipating for us to take out this hourly high, right? So this 1-hour, 4-hour, and 15-minute candle. On the high time frames, the 4-hour and the 1-hour is my objective. But on this 15-minute candle, we have a slightly different objective than compared to the 1-hour and the 4-hour. The 15-minute candles, I'm just targeting this 15-minute high is basically my partial and my break-even point. So notice how this 15-minute candle closes after trading into another 15-minute FEG. So just like the same trade from before, I wait for a reaction first whenever prices taps into the 15-minute FEG. So when prices taps into this 15-minute fair value gap, I want to see how we close there. So we had this pretty, you know, bullish closure, and I'm anticipating for us to take out that 15-minute high. So on the lower time frames, I'm thinking to myself, is there any supporting ideas that, you know, that supports the idea of us taking out that 15-minute high and possibly running into 4-hour high as well? So we have this 3-minute FEG here, and prices dips back inside that 3-minute FEG. That's when I take my entry. So I actually got stopped out on this trade. But this trade right here is like, it is a trade I will always take. It, like, no matter what. This is my setup. I'm buying below the 2 p.m. open. I understand that the higher time frame draw is at 4-hour high, and this 15-minute power of 3 draw right now is also, it's not the exact same objective, but it's in the same direction, which is pricing higher. On this 5-minute time frame here, just notice how we came into a discount of this range as well. So whenever we came into discount in that 15-minute FEG, we had a, you know, reaction to it. And this swing high, this swing low is actually created whenever we retrace into another 15-minute fair value gap here. So when prices retrace into this 15-minute fair value gap, we had, you know, a displacement. We displaced away from that 15-minute fair value gap, and yeah, we create this little dealing range, this fractal dealing range. All right, so that is my brief recap over this week's trades, and here is my analysis for next week. All right, so the first thing I do want to start off with is the dollar index. So the previous week, I was anticipating for prices to take out. Why is my thing not zooming? Okay. So on the previous week, I was anticipating for us to take out previous week's high. However, we didn't take previous week's high and previous month's high. We disrespected a daily FEG. We closed below it, and we also disrespected this weekly inversion fair value gap that I had thought we were gonna use as, basically trampoline for prices to get supported from, but we didn't treat it as a trampoline, and we kind of closed through it. And we also created daily fair value gaps as well, daily civvies, which is bearish price action. So the first thing I do want to note is that notice how I had this this higher time frame objective last week, which was that previous month's high and previous week's high. But our analysis had to take a switch on the lower time frames. What I mean by this is that on the lower time frame, it showed to us that we wouldn't take out that higher time frame objective. It's how can I phrase this? The higher time frame allows us narrative, but on the lower time frames, that allows us entries, and it allows us to see when and where prices will reverse and start changing, slowly altering narratives. And that when it's slowly changing on the lower time frames, that the lower time frame eventually catches up to the higher time frame, and the higher time frame has to also change and pivot from its objective. So coming into this week, just based on this weekly candle here, I can anticipate for us to take out previous week's low, which I have noted here with a plus sign, which is this plus sign right here is like a magnet. So I'm anticipating for us to take out previous week's low, and after that, I really don't that's basically my higher time frame objective, is to take out previous week's low, because we are trading in a daily FEG now, in a larger daily FEG here. And I don't know if prices will react to it, or will we close below it. If we do get a closure below this daily FEG here, I would gun to my head, if we close below this daily FEG here on the daily time frame, I would say the draw of liquidity is previous month's low. Just because this is basically like the last line of defense is this daily FEG here, and if we don't show any respect to it, then we're probably gonna go lower, attacking previous month's low.
Yeah.
Okay. But yeah, that is my higher time frame objective for the dollar right now, and just watch how we trade at this daily FEG here. We are also trading into basically the OTE of this range, this dealing range, from this weekly fair value gap, how prices react here, and to this high. We are trading into a OTE, so just be aware of that. And just really, like I said, after we take out previous week's low, just trade intraday models. Base your ideas and analysis intraday. Alright, so with the dollar going lower and possibly continuing to go lower if we disrespect this daily FEG, what should we see on the indices? We should see higher prices, right? Because they have an inverse correlation. If dollar's going lower, indices should be going higher. So on NQ this week, I'm anticipating for prices to take out previous week's high, and coming into Monday, I'm also anticipating for us to take out this daily high. So not daily high, but Friday's high of day. So I talk about why I believe we're gonna take out this high here before retracing into this FEG. So I'm treating this FEG here and this FEG as breakaway gaps. I don't anticipate for prices to retrace into this daily FEG and then take out previous week's high. I'm anticipating for prices to do something like this, just purely based on how the candle closures. I talk about that on my fair value gap video, and if you do want to check it out, you can go check it out on my YouTube channel. But yeah, so my higher time frame objective is the previous week's high. We shown a lot of strength actually during NFP week. We created two daily FEGs, and yeah, we're really strong on the indices, and just tech in general is just extremely strong. So yeah, my objective coming into this week is previous week's high. And what else do I have? Yeah, okay, so after we take out previous week's high on NQ, likewise with the dollar, I would trade intraday models, because I don't have a higher time frame objective anymore. That's my higher time frame objective is that previous week's high, and once it's taken, I don't have anything to base my trades off of on the higher time frame, which is why I switch on to the lower time frames, because the lower time frame allows me an objective. And yeah, that is just a note that I wanted to talk about. On ES, same analysis on ES as NQ. We're really strong. Previous week's high is my draw liquidity on the higher time frame as of right now. I'm also anticipating for Monday to take out Friday's high of day on ES before taking out Friday's low. Based on just the how we close here and the fair value gap theory, and how I treat these two FEGs here as breakaway gaps. So after we take out previous week's high on ES, likewise, NQ, I want to trade intraday models, because our higher time frame objective has already been taken. So after we take out the higher time frame objective, just trade lower time frame models. There's really no need for you to have any higher time frame bias, because I mean, we are going higher, but the thing is, we don't have anything to really target, because we are at all-time highs, and all-time highs is it's not improbable, it's not low probability. It's just, as day traders, we target already existing liquidity here, but there is no liquidity for us to target here on the left side of the chart. It's, we're just going higher. So like I said, it is CPI and PPI week, so we could possibly take out previous week's high and displace back inside this range and maybe attack previous week's low. Like I said, trade what the market gives you on the lower time frames. On the high time frame, previous week's high is the objective. And yeah, with that, that is basically my weekly market analysis for dollar, NQ, and ES. Should I sprinkle in YM? I don't really have YM charted out, but the thing with YM right now is that we are nowhere near all-time highs on YM, which is the opposite of NQ and ES. ES and NQ, we already have made new all-time highs, but on YM we have yet to take it out, which is an SMT right there. So I don't know when, but this could be that higher time frame SMT here, but like higher time frame, like monthly or weekly SMT. But yeah, I don't know when we will revert and start retracing back inside the range on the higher time frame on NQ and ES, but just as of right now, I would like to see higher prices. And yeah, that is gonna wrap up my weekly analysis for for this week. I do want to ask you guys, is there any topics or concepts that you guys are having trouble with? Just type them down into the comment section, and I'll make sure to take a look at it. And if it's a topic that I can't talk about and it's like something that I understand myself, then I'll make a video over it. It's just right now I basically have already talked about everything that I have in mind. I think the next video I will make is about liquidity, and for next month I will create a video over tips on trading, just like tips to make it a little bit easier, not anything psychological, but like actual like analysis tips. If you guys do want, I can start diving into the like psychological side of trading, but that's for another day. I need to evolve as a person before I can make videos such as that, because I do believe psychologically, making psychological videos or like just having the mindset itself is a lot completely different than the technical analysis side of trading. I can do technical analysis. Psychologically, it's the psychological side of trading is completely different. It is its own world. It's its own world. I don't know if I said that right, but yeah. Just comment down in the comment section, and any topics that you guys have questions over, and I'll be sure to make a video to talk about it. And if you guys do want, join my Discord. I do want the Discord to start off as as a trading community, but as time goes by, I want us to grow as a community. I want it to be like a second family almost. I don't want to see questions only about trading. I want to see like life goals outside of trading, because as traders we're only coming into trading because we're analytical thinkers. We're to be a successful trader, we need to be analytical. We need to be disciplined. We need to practice confidence and patience, right? We have to practice conviction. And an outlet of all of those aspects, right, is trading. If you're good at whatever I just listed there, then basically, if you're good at whatever you're sorry, where am I going with this? If you're good at whatever I just listed there, then that means you are you would be good at trading, right? And I want to there's a lot more topics that I do want to talk about. Just in general, as of right now, it will be probably more trading based, but as time goes by and as I evolve as a person, I do want to pivot and probably shift towards being an overall self-improvement / trading / anything, any journeys that, or skills, just anything that can help you grow as a person, like skill based. If you want to get into marketing, if you want to become if you want to own your own business, then you can just I want the community to be more like that, and I want it to be more of like helping each other grow, because yeah, I'm ranting now, but yeah, just like I said, comment down on the comment section below, and just say list any concept that you might have questions over. And with that, I'm gonna end today's video, and I'll catch you guys later on the next time. Peace out. Bam.